Good evening and welcome to the Australian Stock Market Show. Tonight's show is all about how you can share trade for income. We'll share with you the best strategies to help you create an income stream along with the best stocks to help you do it. Let me say this show is so timely with interest rates on the rise. Now just imagine that every Australian had the ability to generate additional streams of trading from trading the stock market and how important or life-changing that could be. In some cases, I think it could be a vital skill to have in order to survive challenging times. So tonight we're going to show you some things to help you get started, and of course we'll answer your questions and look at your stocks as we aim to help you make better, more informed decisions. Hello, I'm Janine Cox, your host tonight, and joining me is Gillham, and we're Australia's most trusted stock market educators. Good evening.
Hello, Ms. Cox.
Are you all fired up?
I don't even want to talk, I just want to get into it. This is a freaking awesome topic. Yeah. There's so much cool stuff I'm going to share with you.
Actually, I like your tie, by the way.
Thank you. My wife bought it for me. She's got good taste in men and ties.
Did you pick, to match blue?
Oh, you're blue. I know, I do that with my wife too. We often,
ESP?
We're twinsies. Now, can we get into the show?
Yes, let's.
I'm excited about it. Let's go.
Now, my quote for tonight comes from Michael Douglas, who you may remember played Gordon Gekko in the 1987 movie Wall Street. In the movie, Gekko said, "Money itself isn't lost or made. It's simply transferred from one perception to another, like magic."
Well, that's perfectly true, isn't it?
Isn't it?
Well, it's the whole statement, it's like, money's a transference from the ignorant to the well-informed, or from the rich, from the poor to the rich. That's pretty much what it is. It's if you have more knowledge. It's like, remember this thing, if when a wise man, when a man with money meets a man with experience, the man with the money gets the experience and the man with the experience gets the money.
Yes. But it should it be like Robin Hood? Now, I'm not talking about the app for sure.
Men in tights, okay.
Yeah, is that how it should be?
Not the app. Well, steal from the rich and give to the poor. But at the end of the day, it's how can you expect to make money unless you learn how to do that and have the knowledge and experience to do that? And that's why most people are not successful traders or not very successful at trading. They might have some mild success, but at the end of the day, the money goes to those people who are more educated and more experienced. It's simple as that. It is just simple as that. So, but we better move on, Janine, otherwise you'll start yelling at me because we are covering some great stuff tonight. But before we do get into tonight's show, if you do have a question that you're just dying to ask us, then all you need to do is simply text us on 0423 959 846. That's 0423 959 846. Now, a question never asked is a question never answered. So how about you pick up your phone right now and get texting us your questions?
While we wait for your text, it is the third Tuesday in the month, and this means that we normally take a look at the world markets. So let's get into the charts.
All right, world markets.
World markets, we're up to that again.
Exciting, isn't it?
So we've seen a big move up by some of the European and US markets. So the CAC 40 index up 15.82 this year. The NASDAQ 100, NASDAQ composite rocketing up.
Tech stocks all moving, yep.
The DAX is actually up 13.4 and the European 600 index is actually up 9.87.
Wow, look at that. They're all doing very, very well, aren't they? I mean, even the S&P 500 is doing well.
So those areas have actually split away. The Shanghai Comp's actually hanging in, which is good to see, and the S&P 500 is also there. We've got the Asian markets in the middle of the board, so the Tokyo 1000 index up 7%. The Hang Seng index up 5%, and then we come down to the Australian market up 5% at the moment. Is it poised to make the next big run? S&P ASX 200 up 4.87. The FTSE still lagging, down there at 5.74. The Dow Jones, interesting that the Australian market's actually ahead of the Dow.
Yeah, it is, but I mean, when you're looking at the Dow, it's 30 stocks, Australian market, obviously that is 500, which is more comparable to the S&P 500 than the US. But it just shows you the Dow stocks and the S&P 500, how they're differing. And the S&P 500 is moving because of the big tech stocks.
Yep.
And so therefore you can't assume broadly the whole index is moving, all the stocks in the S&P 500 are moving. That's what that's telling me anyway, because the Dow has other ones like GM and, those sorts of big stocks in it as well.
Yep.
Where the S&P 500, out of the top 10 stocks or top 20, I think tech's like huge percentage, like around 30% of it. I can't remember the exact figure, but it's huge. So, but that's what that's telling me.
And India's still down there at the bottom.
But that did really well last year, so you could expect it to pull off, don't you?
Yeah, that's right, minus 1.53.
So what are you thinking?
Look, I mean, at the moment, I think Australia's still got a way to go. We're just poised at the moment.
Yeah, the interesting thing to me about I had somebody from the US message me the other day going, the US dollar's I've been told the US dollar's going to crash. You know, what should I be investing in? And I went, don't believe in what you hear all the time, because currencies, they move 1% max in a day. Like, you know, and I went back over the history on the US dollar versus the Aussie dollar, and I said the biggest move we've ever seen against it in the last 40 years is this much, and that took 4 years to do.
Yeah.
So,
but weren't some of the big moves in the GFC around that time?
No, not necessarily. No. So there's some big, well, it was, but it was sort of, there was a big, long, protracted move and down. So currencies don't just crash out of bed. That's what I was trying to tell him.
Yeah.
But in
that's
the
really
same
good.
here, I don't, you know, that's what we're seeing here on the US markets. It's not a sign of a market crashing at all.
That's right.
Or wanting to crash. So I'm not sure
So
what
if the markets keep going up, what are people listening to?
Well, I even had somebody just recently say that to me, and I said, if everybody's talking about it, it's not going to crash. But
well, that is it for our thoughts on the world markets. Just a reminder that anyone can participate in this show by emailing in your questions ahead of time. Also, remember, there is an extended version of the show available on talkingwealth.com. If you've not yet subscribed, you can get a free 7-day trial and see all of tonight's show. Whilst you're there, you can also enter our prize draw and win one of our courses, or even get the chance to win $50,000 amongst other great prizes. Now let's get into the first email question.
all right, our first email question is from Anton, who says, hi, Dale and Janine. I've got a question regarding RRG, and stock-heavy sectors like healthcare or metals and mining. I'm looking at a sector, RRG, really saying a lot about the direction of the stocks of the sector overall. He's asking whether the RRG actually does talk about the direction of the overall sector, but he goes on and says, let's look at an example. What if BHP is weak for a couple of weeks with an overall loss of X%, but the other 9 of the 10 biggest in the XMJ, or the materials index, coincidentally, these sum up to the same market cap as BHP alone, according to List Corp. Now, stocks are rising about the same percentage X that BHP has lost. The sector overall would be net zero, and for sure be weaker against the ASX 200, as it would actually look like for the sector. Now, if it wasn't that BHP was that heavy, but for example equal weighted, I don't say it's likely to occur in such a way, as potentially they all depend on a lot of the same factors, including energy and commodity prices, etc. But there might be cases like company-specific good or bad news, lawsuits, etc., that could lead to such cases. What do you think about it? Are there even equal weighted sectors for Australia? Thanks, and all the best from Austria, Anton. Wow, that was a tough question.
How did you get that out?
I don't know.
He really put you to the test there, didn't he?
He did. He asked lots of great questions, Anton from Austria, and he's been a big supporter of us, actually. But what he's actually basically saying, he's talking about relative rotation graphs, which I talk about a lot on Talking Wealth, and I bring up stocks and things like that. I don't do that on YouTube.
Yep.
But I bring, and it's all about finding stocks and looking at what's moving and what sectors have the momentum, or what stocks have momentum. And I did a lot of it yesterday for my report. So he's saying, well, if BHP is, or Cochlear in healthcare is the whole weighting of the sector, and it's moving the sector, that doesn't necessarily mean the whole sector's moving. So, and he's absolutely correct in that sort of stuff. So,
yeah,
when
I mean, sometimes you can have that happen where there's that split out, but how long is that going to last for?
Correct. So therefore, that's why you need to go into the sector itself and look at the RRG in the sector to see what's moving and what's not moving. But it could alert you to a sector moving, because you'd think if BHP's moving, like he was talking about there,
the tide will
go with it and bring with it. And so it is a pretty good theory that from that point of view. But you're never going to get an equal weighted sector, but probably more the finances, a lot more equal weighted.
Yeah, I agree.
You know, from that point of view. But most of the sectors in Australia aren't sort of equal weighted, because you're always going to get some big stocks, and it's the same in the US. We've got some big sectors that are more heavily weighted anyway, but that's my answer.
Very good. Looks like we have a text now, Dale, from Steve, who's asking about Min. Will Min crack $100 in 2023? Regards, Steve. Wow. Min's an interesting stock. I think we've had it on the show recently. And he's asking, will it crack the $100 mark, given that it hasn't so far?
I don't know, do you want to flip a coin or do you want to get your crystal ball out?
How about we say...
Because who cares?
Really?
I don't really... Well, if it's going up, you buy it. If it doesn't go up, you don't have it.
What if you're still holding it?
Well, who cares? As long as it's going up, you stay with it. So who cares how high it goes?
Well, that's true. I mean, at the moment, it looks poised. It looks poised to go up. And if we just see another couple of weeks up, it doesn't mean it will continue above to that $100 mark, is the point you're making. It's more about you don't know what's going to happen.
If he's in it, because we don't know. I mean, you're talking about a stock that's gone from $96 down to $75. So if he was in it, he probably should have sold it already. If he's not in it, he may be looking to buy it. And right now, there's no buy rule there, but... Again, if it's going up,
I mean, it's on the other side of the rise, isn't it, now? It's on the other side of the trend line possibly as well.
Yeah. I don't know whether it's going to go to $100 or not. And I said, I don't really... As long as you've got your stop loss on it, who cares how far it goes?
Yep, that's a good point.
Because all too much...
Well, I guess he might care if he's not in profit now.
If he's not in profit, that's correct. If he's losing money on it, so I would agree with that. But it's still, he should have sold it then. So it's about rules, because let profits run, cut losses short.
But if he is in it and it keeps falling, it's just a matter of setting a floor underneath it where he's willing to let it go.
But that's what I'm saying is never worry about the upside. Only ever worry about the downside. So that's me.
Right. Now we have an email from Rhonda. It's Rhonda again.
Rhonda.
Hi Dale and Janine, I start my course tomorrow and will be well and truly into it by the time your program goes to air. Fantastic. What I've really liked about my association with Wealth Within is there's been absolutely no pressure from the company, and that every decision that I've made, from deciding to subscribe to Talking Wealth to undertaking the short course, has been entirely my own. Other companies have inundated me with emails, texts and even a phone call, and I've been looking at the shares that are paying the best dividends for our combined portfolio and have come across Yancoal, which is paying a dividend of approximately $24 at the moment. My husband likes this type of dividend, but I'm having some concerns based on the chart, and I see that for a long time, only a few years ago, there was very little movement in the volume of the shares trading, and while there has been a lot of recent activity, I'm unsure when it comes time to sell the shares that no one will be buying. In comparison with other shares in the sector, the PE is low and the EPS is moderate. The shares have been on an upward trend since 2021, but going sideways since 2022. And I'd be most interested to hear your views on these shares. Kind regards, Rhonda. Well, she's asking all the right things. She's putting all of the right information in there.
Yeah, but she's typed a little bit of a wrong thing, because she said that paying a $25 dividend.
I think that was what she...
That's 100% inaccurate.
What is it?
Well, stock is, if you look at the stock, it's trading at $5 right now. How does it pay?
25 cents, is it?
No, it's paying around 22% dividend.
22%, okay.
But not $25 of dividend.
Right, okay.
Imagine a $5 stock paying a $25 dividend. Everybody'd own it.
Well, that's true. Look, I'd have to say perhaps that was my error in terms of typing it.
No, it was on the email, so I'm not
it?
having a go at Rhonda. I'm just saying this. We just need to correct the error. It's a 21%.
So it's Rhonda's
dividend.
typo, is that what you're saying?
Yeah, it's her typo, not yours. So it was. I did check it before the show anyway, just because I thought, hang on, how can a $5 stock be paying $25?
Well, you know what? I think that she will probably go back to her notes, laugh at herself and move on.
She will. But so obviously the question's about buying a stock for dividend. What's your thought about that?
Never.
And especially a high dividend yield like that.
And especially a stock that looks like that and is volatile. That's not a dividend stock. That's okay, we'll pay you a high dividend because we want more investors to put their money in.
But it doesn't mean it's going to go anywhere. Yep, it's probably just holding the stock price. It's probably not going to go anywhere. So that's been my thinking.
That's true.
They're just trying to keep
It's more
investors.
a trading stock, this type of share.
It is, but then a 21% dividend yield's pretty attractive.
Yeah, I mean, look at this. You might be able to stay in it for a number of months, but then you'll get pushed out anyway.
21% dividend yield, not bad.
Well,
what do you reckon?
She probably just wanted her husband to hear it from you.
All right. Don't buy for dividends, husband. Listen to your wife, Rhonda. She's going to be an absolutely awesome trader. I'm absolutely positive about that. But Janine, it's time to get into our topic for tonight, which is all about how you can share trade for income. Now, of course, in our normal style, we're going to share much more than that. with you tonight. Now, we'll also get into what additional income gives you, but let me ask you to ponder a question, if I may. What would you do tomorrow if you suddenly had an additional income stream? How would that change your life, and how would you feel about it all? A lot of people don't ponder that sort of stuff, how it's going to change their life.
Well, look, I think plenty of people will have, because isn't there a ticket that people can win at the lottery that does that for them? And I'm sure that
that's not pondering. That's like really
tens
pondering.
Of thousands of people.
That's just wishful thinking.
Well, that is wishful thinking, but it means that they've given some thought to it.
No, I don't think so.
But what you're talking about is a whole different ballgame.
A lot of people take out a touch lottery and never believe they're going to win it too.
That's true.
Or they go gambling and they might win a little bit. But it's really when you take time to think about, well, what would an additional income stream? Let's say I got enough income from my investments that equaled to my wage. How would that change your life? What could you do?
Look, I know people who have got big funds that are set up for that.
Yeah,
so they've got their own share portfolio that's set up to deliver them an income.
Yep, I do. I know plenty of people who do that. But again, a lot of people don't allow themselves the freedom to think like that. And they go, oh, it's not possible, I can't do it, I'm not smart enough, I'm not rich enough, I'm not whatever, or whatever the excuses. I'm not worthy of it. There's a whole range of different beliefs behind all of that that stop people from actually making that leap into trying to do it. And that's part of the stuff that we help people work through, don't we?
That's right, absolutely. And I wonder how many people out there would like another income stream right now. Can we count those?
Put your hand up if you want another income stream right now. And if you don't have to work for it too. I mean, not talking trading more money for time, are we?
Look, we're talking about, there is some work involved, obviously.
Yeah, but I'm not talking about going out to another
doing
job.
Doing the preparation.
Yeah.
You're not talking about a fixed time involved. You're talking about choose the amount of time that you're going to do to put in.
Yeah, rather than go and get another job and work more hours, want multiple different jobs, which people can do. But to me,
there would be a few people doing that right now, given what's happening with interest rates.
I dare say there are a few people who've got multiple jobs, but at the end of the day is you can work from home and not put a lot of effort, have to put a lot of effort in once you know how to do this.
Absolutely. So I'm going to agree with him there, but we've got we've got loads of stocks to talk about, but before we get into some really good stocks for earning income, let's give everyone a sneak peek of one of the slides from our podcast.
All right, so this is the golden rules to building wealth, isn't it?
That's right, that's a sneak peek.
Yeah, so that was a podcast we did, 2 weeks ago or this week?
Yep, this is a podcast we did.
This week, the launch yesterday.
This week, so the first podcast went out and we're just waiting on the next one to podcast to be released. So
okay, so we'll talk about that. So the plan everybody has is they want to build up enough.
This was in the second podcast.
This was in the second podcast,
yes,
this one, which is not released yet.
It hasn't gone out yet, so you've really got to watch the first one.
That's next week.
Yes. So this one's all about the plan. So it's about setting up those multiple income streams and then being able to pay your expenses, which we've drawn as a bigger circle. Some of it, your money goes into compulsory superannuation. So normally that's people's work that's paying that. And then you've got money going into your investments. Now, you suggested 20% always to go into investments. The younger the person is, should be closer to 50%.
Correct.
And then you've got income coming out to fund
most people,
your early
when
retirement.
they get their wage, their income goes to paying expenses and then their employer pays into superannuation. That's it. Whereas what we're saying, that's not the plan. The plan needs to be money going into investments at the same time, and that could be share trading or property or other things.
Correct.
But they need to do that as well, and they need to be budgeting or using their financial wherewithal to really plan it out properly so they achieve what they set out to achieve,
and share
which is
trading
wealth.
is obviously going to be a part of that.
Correct, and that's why they need to watch the video, because the first part of it went out today or yesterday, and we're already getting a lot of feedback on what the first part of it was.
Great.
This slide is from next week, so they've got to watch this week's to really get set up, and it's on YouTube. It's not on Talking Wealth, it's on YouTube.
Yep.
So
now you heard it. Now, Dale, when we talk about multiple streams of income, it's not about an income in retirement per se, but it's extra income, isn't it, as you build your wealth into retirement. So when we say retirement, what age are we talking about here?
Well, it's not just extra income in retirement. I'm going to argue with on that, because it's extra income all the way through life. It's about having... The plan is to have a lifestyle today, but also plan for having a lifestyle tomorrow. And all too often people, they we see them spend for their lifestyle today, so they don't have a lifestyle tomorrow. They have an existence.
That's a really good way of putting it.
But to me, it's not. It's always about having plenty of money to fund the lifestyle that you have, and having an extra source of income really takes the pressure off. And what I talk about it is giving people more control and freedom. Because how many people have come to us and said, I hate my job, teach me how to trade. And when we start teaching them how to trade and they make extra income from that, they go, I love my job because it's paying me more money so I can go more trading.
But traditionally people think of it as dividend income, don't they?
Well, that's a lot of BS. You know, that's probably the least thing on my mind as a trader in trying to create income.
But even investors are starting to come around to thinking,
Well, I hope so.
you know, that once your account builds up to a certain amount, you just take some of that money out, put it into a separate account, and that's for your expenses.
Well, they do, and that's the thing is, isn't it? Wouldn't that? It's a nice situation when you've got your investments ticking along really nicely, income coming in from that, capital gains happening. And you've got money in the account that if you need to do something, you can just pull a little bit of it out and then do something. And that's great. And we do have lots of traders doing that.
Fantastic. And trading all different things, including Forex and
lots
currencies.
of different stuff. There are a lot of different markets at all. Yeah.
Okay, so true. Industry talk about balancing investments between cash, bonds and stocks. Why don't they talk about using growth assets and encouraging people that it's okay to draw down some of the profits and put them into another bucket and then draw down the income from that?
Yeah, they want you to keep putting your money into your industry super funds. And freaking hell, that's so dangerous.
Or advisor model portfolios.
Yeah, it's like you lose control over it. And to me, the government's never going to stop playing with superannuation, so you need to have investments out of it. I only heard today from a financial planner put an article out saying the government, one of the ministers is talking about using your superannuation for all these other things, funding government projects.
I know that really gets you going, so can we have some more of that?
Stupid government.
Okay, that was great. Now most want to know how much they can make.
Wasn't that so true? How often have you had somebody said to you,
how long's a piece of string?
How much money can I make from trading? And you go, well, how long's a piece of string?
And it depends on the individual.
Yeah, it is correct, absolutely.
Depends what you trade.
Yeah.
Depends on your strategy and the stocks that you choose.
Yeah, you can make 10% a year, you can make 100% a week if you wanted, depending on your knowledge and experience and how you're going to do it. So I think
now, Dale, we've got a lot more to share, so we better get moving on.
I know, you keep pushing me along, don't you?
Well, you're doing well so far.
I'm trying to...
You're staying contained even when you talked about the government.
I know.
Now, Dale, I know that you feel the same as me in that it has been really interesting working with a lot of traders over the years. So how about we share some of the biggest mistakes and experiences that we've helped those traders with?
Oh, God.
I think one that comes to mind was somebody after the GFC who he realised what he was doing wrong. Obviously the market had to teach him that and he had no structure to the way that he was doing it.
Probably 90+% of people who tell me they're traders before they start our course don't really have a structure. They thought they might have a bit of a structure and a process, but not until they see what we do, they go, oh shit, I was just all over the place.
Swinging it in the wind.
They were just guessing and swinging in the wind. So, but there's that cognitive bias that they have that they think they're more knowledgeable and more experienced than what they really are. And at the end of the day, you don't know what you don't know until we tell you what you don't know.
That's true. And I get a real satisfaction, and I know you do, that when we've been able to support traders to achieve what they thought unattainable or was just wishful thinking.
Well, that's so true, isn't it, Janine? I'm actually really inspired by our students and what they can achieve. I mean, you know, it really does spur me on to do more whenever I get emails from some of these students, because they just blow me away, and I just want to put more into it because they're putting their heart and soul into it, and what they're achieving. I'm in awe of some of these people. You know,
me too.
Single mums that are doing it, people on pensions doing it, 80-year-olds doing it, 18-year-olds doing it, and they're getting results. And I just go, yep, they're the champions, not us.
Yeah.
You know.
Now it's awesome to see how their lives have changed indeed, isn't it? I mean, we hear from them. You get emails all the time, don't you?
Oh, absolutely. And they're complimenting us.
Yeah.
And I go, no, you've done all the work. It's
That's
you.
right.
So, but you know, to me, it definitely is. I mean, I know many people would like to trade from income, or they'd like to trade for their income and change their lifestyle. But the reality really is that so few people are really prepared to do what we share that is really needed to achieve their goals. You know, the variable seriously is not the course or the support that we give them in the course. It really is the person or the student who comes to us. You know, because at the end of the day, they say the teacher arrives when the student's ready. But I don't think I better get into that because we'll be here all night, Janine. So in the famous words, what's next?
Yeah, and I thought you'd never ask. Now, there's no doubt a lot of people start trading for income without proper planning. What do we do about that?
Really? They start trading without proper... What do you mean?
Isn't that strange?
I've never seen that before, Janine.
And then we tell them what they've got to do, and it's like, oh my goodness, I should have done that years ago.
Yeah, their perception and reality are two different things, aren't they?
Now, to help our viewers, it's so important you set yourself up right the first time. Now, remember, we understand if you did not start out this way, we know what we have to say will help you.
Well, absolutely will help them. We have some tips. Firstly, we're going to have some tips and we show you how anyone can get started, and I literally mean anyone. Now, how about we show all of the 10 tips and then we can discuss them? Yeah?
Let's do that. I'm excited about that. It's a great idea. So let's take a look.
Okay, so on the graphic, we're seeing the first 3. One is document your why.
Now, I think we've banged on about that so many times, haven't we?
Well, to me, it's all why, what, and how. And unless you do the why, the what and how doesn't matter.
True.
Because if you don't know why, then don't even bother starting.
The why is the thing that people just feel. I find that a lot of people, and particularly men, are disconnected with.
They are.
So they'll say, oh, I just want to make, this money, but, why do you want to have it? And they find it hard sometimes to actually put that in writing. So at one stage I just said to them, let's keep it simple, just put 2 sentences in a paragraph and tell me what your life will be like in 5 years' time when you've done it.
And a lot of them struggle, I do. And I'm working with some people now on that one also, and mainly men, on exactly the same thing. They're not doing it, but you need to document your why. So,
okay, so the
number 2.
Second one is do research.
Absolutely.
Yep, that's a big one. We always say do your own research, and that means talking to accountants, financial planners, do your research online, have a look around so that you just know the sort of questions to ask. Talk to us, talk to some of the traders, the people who have done it before. And also heed some of the things that we say about not going into high risk type areas
How many people
at the start.
don't do that? They start to do the research and then they don't follow the experts. But
Correct.
At the end of the day, the quality of the answer is determined by the quality of the question.
So true.
So do your research first. Next one is write a business plan with goals. And I don't have to say if you plan to fail to plan, you plan to fail. It's just pretty simple on that one.
And the business plan can be as simple or as complex. I've seen some 10-page business plans.
I've seen ones like some of the traders are coming in with big stuff like that. They're engineering types and those types.
Yeah. Okay, so we've got another 7 more in the list, which we could just mention briefly before we go on. And I haven't got them here, that's right. So that's a secret, is it?
No, it's not a secret. We're going to tell everybody shortly, but we need to move on, Janine. Okay. So stop trying to get ahead of ourselves.
Okay. So to help you get started, remember there is more to trading than just picking stocks.
Seriously, great point, that one. Remember, do not believe what you hear or even what we say. In fact, check it out. A great resource I want to share with everybody is the Australian Taxation Office website, which we're going to take a look at now, because the reason why you need to do this is because all too often people do things for tax reasons, but they don't understand what they are in the first place.
Yeah.
So we need to look at it. So because there's a difference.
Or they haven't even thought about that side of things.
Correct. There's a difference between a trader from a tax point of view and an investor on a tax point of view, but we need to understand that. So you're going to go through that, are you?
Yeah. So if you hold shares as an investor, your shares are assets and are subject to capital gains tax when you sell them.
Yep.
Most people know that. Your costs are taken into account at the time you sell your shares.
Yep.
If you have a capital loss, you can use it to offset capital gains, but not to offset income from other sources.
Yeah. And if you hold an investment for over 12 months, you get a capital gains tax relief of 50% of that.
Yep.
So you can do that. But if you hold shares as an investor, so your income is earned from dividends and similar receipts. So whatever you get from those dividends as well. Okay. What else are we going to cover?
Okay. So if you're a share trader, that's the next one we want.
Yeah. If you're a share trader, your shares are treated like trading stocks. Like in a business, you buy a stock at a wholesale price, you sell it at a retail price, and you make the margin in there. So your gains are actually treated as ordinary income. And this is a real bonus for you because your losses and costs are treated as deductible expenses in the year that it occurred, including your office, your computer, your internet, your data feeds, your software, your accounting fees, all that sort of stuff.
And the expert to talk to is
me.
The accountant.
Sorry, the accountant.
You're not an accountant. And
no,
you admit
but I know how to do this because this is what we do. This is really cool because you can, you pay your kids to clean your office at home and claim it on your tax.
Oh, come on.
You can.
Yep. Okay.
Seriously.
Yeah, I know. I've seen that written in text.
You buy
before.
your wife flowers, you claim it on tax because you need flowers in your office.
Right.
Just because it's your office at home doesn't mean anything.
Now,
Okay.
there is something else you need to be aware of, and I know this sounds like pushing our barrow, but you really should not start trading for income before you've completed a suitable course and have prepared your business plan. I mean, you have to be trained before you can do any job properly, so why is trading for income any different?
Well, that's got to be true, doesn't it?
Yep. Now, this training gives you direction, and we have seen many traders coming to us because they've gone off the rails completely.
Actually, that's most of our students. I think 90% of our students have tried trading before and have not really got the solid strategy and plan together. So,
well, I'm really excited about the ones that start off from scratch and they've done nothing yet, and that's the first thing they see.
I love people that have done anything before, and
they're easier to teach
because they're easier to teach rather than the ones that have been doing lots of stuff.
Okay, can I say most people do things arse about?
You can say that if you like.
And they want stock tips which are short-term thinking and on the whole, give a man a fish. That's what you talk about, isn't it?
Yeah, it's like, to give a man a fish, you feed him for a day.
Yeah, that's right.
That's just a crap way to trade, just giving people hot tips. But it's what I find it satisfying or what they're trying to do is satisfy an immediate want in them rather than what they actually really need. And is why so many people fail, because they just think, I just need a stock and that's going to make me successful. But I've seen many who think they are traders take years to work that out, and generally it's 3 to 10 years. They go, just getting stock tips doesn't make me successful.
Now, there's loads of helpful information on websites like the ATO that's free, and we've got loads on our website as well.
We do. We've got bucket loads of all sorts of stuff on our website, articles, you name it. But yes, there's all part of doing your research that we mentioned a little bit earlier. And a failure to get this right could mean that you may be slugged with a big capital gains tax bill, like we talked about with the tax treatment. If you get that investor trader wrong, it could be a lot more tax bill you pay.
Yeah, this is so important, and I'm agreeing with you again.
And that's
Look
good.
out.
But it's about, I've said to a lot of people, it's about, if your intention is to be a trader, then you write a plan and you give that to your accountant so they know what it's about. And then when you do what you said you're going to do, the tax office can't argue with you. But if you don't have a plan and you don't document it, then the tax department goes, well, hang on, you're not a trader, you're an investor. Or you're not an investor, you're a trader.
That's right.
And they'll decide for you, and then it's
and that's all the more important to get those things organised.
And you need to get it right. So what's up next, Janine? Are we up to the stock part yet?
Yeah, just say the word and I'm there.
I've been saying it plenty of times. I've been saying a lot of words, but how many hints do you need to get into the stocks?
One more nugget first from the ATO, shall we? Have a look.
Go for it.
All right, so if we move down a bit, we can see the nature of activity and purpose of profit making is so important, which is, part of what you were talking about before.
Yeah.
The intention to make a profit is not on its own sufficient to establish that a business is being carried on. So that's what you've got to be able to prove.
That's what I was just saying.
Business plan.
You've got to have the plan. Yep.
A share trader carries on business activities for the purpose of earning income from buying and selling shares. Now we'll just move on to, you need to consider not only your intention to make a profit, but also the facts of your situation. This includes how your activities have actually been carried out, or a business plan of how your activities will be carried out. Now, a business plan might show analysis of the current market and each potential investment, research to show when or where a profit may arise, and the basis of your decision making, which is all the stuff we do.
Which is all the stuff we talked about in the first part.
Yeah.
And talking about once you watch your why and obviously do your research, all that sort of stuff. So it's having that business plan, and we call it a trading plan, but it is a business plan, isn't it? It's about how you're going to drive income.
The business plan is separate from the trading plan. So the trading plan is following on from that. So, which a lot of people don't realise, that you've got to actually have that business plan up front.
No, most people prefer to throw darts at a dartboard. Hopefully they're going to get something to stick. But anyway, Janine, I know you love to help people with lots of facts, and now let's get into a few stocks. And we'll chat about the strategy as we consider each company, which is really, really important.
All right, now you got me there. You know that you have just made one of the most important statements for the night, so congratulations on that. Did everybody get that?
Well, hopefully they did. So can you repeat what I said that was so wise and wonderful? It's about having strategies, not just one strategy, you know.
Now, do you know how many people try to trade for a living and apply one strategy to all of the stocks that they trade?
Yeah, one size fits all. Too many, way too many, way too many people try and do that.
Yep, and when you know what we know, that's so weird.
Yeah, but they go to these internet gurus and they have this one little trading plan and they go, here's your multi-million-dollar trading plan, go for life and prosper. You know, and you go, well, that's great, it works in certain situations, and the market changes personality all the time.
That's true.
So you're sadly out of luck when they don't work.
Though we do get a reality check when, well, that's when they join our course, they will get the reality check, won't they?
Yeah, we do that. We do that. It's about, again, it's about taking people back to what works and stripping back some of the stuff that doesn't work and giving that reality check. And they find it out themselves more so than us pushing them through it. So they it's like peeling an onion. They slowly peel out the layers and they eventually get to the core of it and they go, now I get it.
Okay, let's get into the charts and discuss some interesting stocks and strategies to trade them.
All right, so what have we got on the screen?
All right, now some of you are going to be surprised about this. I've put Commonwealth Bank up. And people will say, what the? You know, that's a great dividend stock. And it's so true.
But it's a good
However,
stock.
what a lot of people don't realise, for less work, you can trade the same stocks.
Correct.
With a medium-term strategy and then look for a different strategy on the same stock to trade it for income. Now,
but you can trade this on a monthly chart or you can trade it on a weekly chart. I know that for a fact.
Now, years ago, we did a presentation on this. Now, just looking over at the chart here, we can see some great rises on Commonwealth Bank so that people will be surprised about sometimes the way Commonwealth Bank moves in a number of months. You know, it could be anywhere between 3 and 6 months that these rises
but
are.
Most people would not even think about trading this. Yeah, but they're not. They wouldn't think about trading this for income.
That's right.
Because they're thinking of income as dividend yield, and income can be dividend yield or capital gain, as we talked about with the ATO website.
Yeah, so you might get a dividend in a rise where you're trying to get the growth out of it. I mean,
I don't know how many times I haven't got a dividend because I've been in and out and didn't get the dividend. But anyway, so what's the next stock?
Okay, so this repeats over time. And look, ALL I really like. If we just go and have a look at the weekly chart for this one, we can see that it trends really nicely when it gets going, and that's part of the key for searching for these gems. Now, if we're looking at this again, like Commonwealth Bank, we can see these really nice rises. ALL's got just a higher level of volatility, and so it's able to produce them quicker. You can see there 3 or 4, maybe 5 months there, maybe 6 or 8 months there.
The difference between this one and CommBank is this one you have to be a little bit more sensitive with your entry rules.
Well, that's so true. The rules are different.
The rules are different. So some stocks you can be a little bit less sensitive to them with the move in price to get your entry and exits. But other ones you have to be a lot tighter with your entries and exits. And I'm not talking about trying to find the last bottom of the bottom, the low of the bottoms. I'm talking about when they start moving in the direction.
Well, that's right, because some people try to pick these bottoms and look for reversals, which you need more confirmation of that.
Correct.
That's the thing.
All right,
we've got another one. So Whitehaven Coal, which may surprise some people.
Now,
it's not everybody's. Wise Tech.
Sorry.
It's not everybody's cup of tea, because I know I was talking to someone about Whitehaven Coal recently. And if we look at these moves here, so you can see the reason I've chosen these stocks in order is because you can see the volatility going up for some of these rises, and WTC is all the more interesting when you see some of these moves. So great for getting income out of them as these rises go up. If they have a decent rise like that, you know that you can get
you'll get more income out of this and CommBank.
Imagine comparing that to a 3% or 4% dividend if you can get that out of it.
Why would you go for 3% dividend and 4% when you can trade this and make 10 or 20 or 30%? Because the chances of BHP rising anywhere
it's short-term stuff.
Yeah,
sometimes
the chances between BHP
be
rising 0 to 30% in any 1 year is huge.
Yeah.
Huge.
Right. So these trades could last anywhere between 6 months and 6 weeks and a few months, couldn't they?
And a few months. Absolutely it could. Absolutely.
All right. So that's the first 3 stocks.
Well, it is the first 3 stocks, but there's so much more to go, so I can't wait to see what's up next, Janine. But before we do need to go to a break tonight. Now, as we all know, that everyone knows we always have a hell of a lot more. So, however, just before we go to a break, we'd like to thank our YouTube friends. We do know you have questions from time to time, and we want to answer them for you. So email your questions to info@wealthwithin.com.au.
If you have not visited talkingwealth.com, get over there and take up your 7-day free trial, and you can watch tonight's show in full. Whilst you're there, you can also watch videos from property experts, financial professionals, wealth coaches, other stock market experts in business and personal development from Australia and around the globe. So head over to talkingwealth.com, and remember, you can even win a course or 50K. Wouldn't that be great?
Well, you forgot they can also watch my Australian stock market report each week. Janine, I know you don't like it, but they do like to watch my report. So for those watching us on talkingwealth.com, just relax. Stay tuned, grab a glass of wine or a beer, as we have more of what you want in the next part of the show. So stay tuned where you are. We'll be right back after this short break. We all desire a comfortable retirement, but to achieve that, we do need to accumulate sufficient savings that fund that lifestyle into the future. Now, research from CanStar indicates that the average 30-year-old male has around $27,000 in superannuation, whilst females have $22,000. This suggests that millennials currently have $30,000 to $40,000 less than they need for a comfortable retirement. So the question that needs to be answered is, if we know how much we need in retirement, then why do so many fail to plan for this? Last week was a pretty fantastic week on our stock market, and it does look like it's now bullish for at least the short term, but we still need to make sure that that low is actually in before we go hell for leather buying lots of stocks. It doesn't look as bullish when you look at it in this bigger time frame, and this is why I always encourage people to look at these longer term time frames. We need to consider that the market is not always going to be strongly bullish, because these last couple of years, so many times I thought a stock or the market was bullish and only for it to turn the other way. And so there's a bit of volatility there, but also a little bit of indecision, and that really does, it's all about confidence in the marketplace. So if you have been struggling with your portfolio to get decent returns, if you're a more buy and hold or more longer term investor, then that's the reason why. The lifestyle you lead will have a direct correlation to the decisions you make today. If you want to live a better lifestyle into the future, you need to start planning today how you're going to get there.